Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video for Monday, November 28th through Friday, December 2nd, 2011 is brought to you by Realtik. Alright guys, let's get into the mix today. We look at last week first, then we're going to project into the future. Remember, if you want a free trial, a 7-day free trial, come to InTheMoneyStocks.com, join the Research Center or the Intraday Stock Chat, or just do both and rock it out, making profits every single week. Alright, bottom line is, last week the markets continued to be under pressure. We did come down towards support though, I will say that. You are into a support area, and from the looks of the charts, it is telling us a bounce is relatively imminent in the early portion of this coming week. So again, keep an eye on that, folks, as we get closer into the week here, going into Monday. Now, let me explain what I mean by this. Well, first off, last week we can see we had a 4-day trading week. It was actually 3.5 because you had Monday, Tuesday, Wednesday, and then it was a half day on Friday right here. So 3.5-day trading week all in all. And the markets pretty much went sideways for the first couple days. Then we had that sell-off and then sideways to lower again on Friday. Now the Friday sell-off, not surprising. Even the late day bar down on Wednesday going into the Thursday off day for the markets, if we zoom in a little bit, see that big red candle? That's very reminiscent of traders saying, I do not want to hold on to anything in this environment with what is going on in Europe. And I mean, it makes total sense. If you think about it logically, every time the market is closed in an overnight session, what happens? We get some sort of bad news from Europe. So if you have a full day off, for instance, the Thanksgiving day, why would you want to hold? That's actually 2 days in Europe that the market's open, that you have a possibility of having some danger. So going into Thursday, here on Wednesday into the close, people sold, and you can see the spike in volume right there. That's all it was. Essentially, people saying, there's no way I'm taking that risk. And the same thing on Friday, the half day. Look at how the markets did actually pretty well early in the day. And then the last hour and a half of trading, people said, you know what, there's no way I'm having to worry about my positions over the weekend. Let's just move out. We'll reevaluate Monday. Now, again, based on where the market is on this area of support, and I'm going to show you the daily chart because I think that's more telling. You have a lot of support. See this red candle right here, which was a gap right there, and then the open was right there, and we closed here. This is the official gap fill right here. So right around 115.80 or so is a huge amount of support. In addition, you also have the gap fill, which was filled on Wednesday, and touched on Friday right here. So this area right here between these two blue lines is significant. I repeat, significant support on the markets. And I would actually be surprised if the market does get through to the downside here without some sort of bounce. Now, again, this bounce could start as early as tomorrow, going into Monday, and, you know, it ultimately could last 1 week or so at least. I don't think it's going to be a ginormous bounce. A lot of people expect bounces in this market to be 5–10%. I don't necessarily think it'll be upwards of 5%, but you could see a 5% retrace. My guess is the general target of any sort of bounce is going to be between this area right here, which is gap fill, and this area right here, which is gap window. Notice right in between, you have the 50 moving average. All right, so between these two levels is where I anticipate any sort of bounce happening. Notice the 20 moving average is curling over. That eventually will go lower and lower, go into that area as well. This is going to be the area. This is your target for any sort of bounce. So as you can see, it's not a huge bounce. You're basically talking back to 121-ish, 122-ish, somewhere in that vicinity, somewhere in the 121 to 122 on the SPY. And remember, the SPY mirrors the S&P 500 perfectly. So that's what you really want to remember, is that this is just an ETF that tracks the S&P, so essentially you map that out to the S&P and you can just track it perfectly equal. All right, so again, that gives us a bounce of about 5 points or so, which would be about 4%. A 4% bounce is about what I'm looking for in terms of when this bounce comes in. Now, we always have to talk about the possibility of a breakdown. Now, if we take out this lower level on a closing basis, and we confirm. Now, confirmation is a proprietary indicator that we developed here at InTheMoneyStocks.com. It's unbelievably accurate to tell you when a true breakdown has happened or when it's a fake breakdown. And many amateurs out there, they wait for a close below a candle. Like, for instance, if we closed on Monday below this blue line, they say, oh, that's a breakdown. They go short. And then they get whipped out and lose money because the market reverses, because there was no confirmation. Now, again, I can't explain to you this proprietary method unless you join the Research Center or the Intraday Stock Chat. If you join that, you will get every single proprietary indicator we offer. And again, there's a 7-day free trial, so there's no obligation. You join us, you see what it's all about, and that way you can really profit from these methods. And by the way, hedge funds don't know this stuff. We teach it to hedge funds if they pay us enough. This is here for the individual retail investor to start having an even playing field, these proprietary indicators. And these are time counts, things that we teach in our webinar, things that, again, the average institution does not know. And the reason why we do this, folks, for those of you that may be curious, because it's honestly time the playing field gets evened. Any individual investor is at a huge disadvantage. They're essentially the 1% to the 99% of institutional money out there. They're going to get bullied. They're going to get their money taken. Think about the run-up in 99, 2000, the tech bubble, and institutions are unloading into the highs of that as the individual investors getting all happy and buying, and then they wipe out all their money. Then going into 2007, same thing. The institutional investor finally gets coaxed back in the market, and ultimately the institutions flush this thing. All right, and what do? They get bailed out. Does the individual investor, who lost 70% of his money in his account get bailed out? Of course not. So again, you got to start leveling the playing field here. These proprietary indicators we will teach you. And that's what it's all about here. Yeah, I give out my live trades. Of course I do. My swing trades, my investment options that I take personally, I give you in the research center. I give it to you in the chat room. But I'm also here to teach you so you can go out and start continuing to profit in any environment. I don't care if the market's going up or down. You stop being a bull or a bear. You start being an investor who's a trader. And a trader, I don't mean a day trader. You don't have to be a day trader. You can be a trader that buys something and holds it for a couple weeks and then sells it for 5, 10%. Bam, go on to the next thing. 5, 10%, 5, 10%, 5, 10%. That's how you do it. All right, in any case, this is support here. If this breaks right here, if this low level here, which is at the 115.75 to 80 level breaks, where are you going? You most likely will head to a little bit of support right here. This is your next level. And then ultimately, then you start retesting the 110 level. The 110 level is huge. And ultimately, the 107 to 108 level is also huge. But this will be an interim level here of support, which is right around the 112.50 to 112.60 area. All right, so that's what we have going on there. Let's take a look at a couple other options here. And again, my projections are early bounce. Sometime Monday or Tuesday, you probably get some sort of sustained bounce in the markets. Retail sales, by the way, over the weekend were pretty solid. They came out pretty solid. I don't think that's going to be the end-all, be-all. And a lot of people are saying, oh, well, that's great. This should help the markets. To be honest, it may help a little bit, but it's Europe. Europe is a mess right now. The contagion because of that bond sale in Germany really freaked out investors and traders on Wall Street. Even institutions got caught off guard a little bit there. That's what you're looking at. It's all about Europe. If Europe shows some good signs, you will see a bounce in this market. If they don't, you won't. Technically speaking, we should see something good out of Europe based on where we're trading for a small bounce. That's all I'm saying. Technicals will always lead the news, folks. You want to know, you want to get tomorrow's newspaper today so you know the future, you read the charts. Simple as that. And I'll teach you how to do that here at inthemoneystocks.com. Take that 7-day free trial. All right. Taking a look at the dollar, guys. What a bounce on the dollar. We've almost done a full 100% retrace here. Look at this. Up, down, and then up. Very unusual to see this type of pattern on any chart. It just shows you the times that we're in. One thing I want to show you guys, take a look at this. And this is what is also telling me there might be a pullback in the dollar. Connect the pivot high right here from November 30th to the pivot high here, January 11th, and connect it right to this pivot high here on approximately the 4th of October. Extend that line out, what do you get? You get the exact pivot high from Friday. See that line right there? Let me erase this one so we can see it clearer. Right there. That's telling you you're into resistance on the dollar. Now, the dollar eventually will break through this, in my opinion. You will see the dollar break through, but it's not yet. And remember, the reason why it's important to watch the dollar chart is because it's an inverse relationship to the market. If the dollar goes up, the markets will go down. If the dollar goes down, the markets will go up. So the fact that we're into resistance here also gives us a little bit of a bias for any sort of pullback in the dollar tells us the markets could get a little bit of a bounce. All right, understand this stuff, folks. It's so important. I mean, people learn how to be doctors, learn how to be lawyers, go to school for that. You learn the charts, you can make more money than all those professions. And you do it from the comfort of your own office or your own home or whatever, just by sitting in front of a computer. And you make 10 times as much. Trust me on that one. I'm living proof of that. Okay? All right, let's go on to some other charts here. The GLD, let's take a look at gold. Gold rolled over beautifully. I called for this rollover in gold based on this macro in spirit of bearish pattern. Beautiful in spirit of bear pattern. It did roll over. Now you have another small in spirit of pattern. I'm not a believer in this one, though. As long as you stay below the 50 moving average and the 20, I'd have a slight negative bias to the 200 right here. But again, I don't love this chart right now. It's not a great in spirit of bearish pattern there right here off of this pattern as a possibility of a fall down. So I'm not loving that chart, guys. I think you stay away from that in terms of a short or a long. This chart's a little bit better. Why? because it's a clearer in spirit of bear flag, and even the sideways move down here, you have a nice in spirit of bear flag here. Target short term right here. Now again, this will have a couple bounces along the way, there's no doubt about it, but ultimately silver I think does go down to about 27.60, 27.50. Let's take a look at oil, the USO, which is the ETF that tracks oil. Oil's come down here. You do have a little bit of an in-spirit up pattern here, beginning to look bearish again on oil. I'd still like to see a little bit more of an uptick, make me a better in-spirit of bear flag. As long as it stays approximately in this angle, somewhere in here, as long as you stay in here for another couple days, by midweek it might be a short on oil. I shorted oil up here, made a little bit of money on the pullback, nothing crazy, but ultimately the key is to catch the next move, which ultimately does look like it will be to the downside in the short term. And again, we need to see still more consolidation, but maybe midweek we'll reevaluate this. If you're in the research center and I decide to take a position short oil, of course I'd let you guys know, and I timestamp it. It's all timestamped, folks, documented. So you have my exact calls. We send out alerts, which is a text message or email alert when I post something up there. And the videos every night will cover this stuff. We'll go over the charts every single night. All right, guys, enough here. I want to get back to work, studying these charts, getting ready to profit this week. You want to be a pro. You want to be part of the elite. You want to be matching up to the institutions and winning more than the institutions. Then you come to inthemoneystocks.com. That's inthemoneystocks.com, folks. Come join, take the 7-day free trial, and profit with the pros.